Welcome everybody. Just give me half a minute and then we will dive straight into this. Okay, welcome. For those of you who are, oh, hang on a second. Just got a sort of problem out. Right. Right, I think we are ready now. Sorry, just had a minor hiccup there, but I think we are getting sorted. Right, let's get going. Okay, so for those of you who are not familiar with this format, I'm going to dive into the market proxies and have a look at what this market's doing, look at the market internals, project my usual planning template on top of what I'm seeing, and talk to you about what I'm expecting for this week, and talk about a couple of trades I've done today, talk about what I'm planning for this week, and then we'll talk about the longer term. Before we dive into that, I just wanted to go through something with you, because I've been talking about this, this FTSE crash. And this is a scenario for 2023 as 2023 unravels. So I am already shorting these highs, but I want to talk to you about how I'm managing it and what I'm looking for as the days and the weeks unfold, and how I'm going to manage my trades. And so to do that, what I wanted to do is look at what happened in 0708. So here you've got the FTSE in 0708, and you can see in the summer of 07 we topped out at this 6,700 and did a three-wave drop, and into the second half of the summer and into the autumn we popped back up to resistance, and then we did this 1, 2, 3, 4, 5 wave move down into April 08, and then through the rest of the main buying season we pushed up into the 6,300. Okay, so we had this distribution pattern followed by a severe drop. This is a weekly chart, by the way. And then we had this three-wave corrective wave into 6,300. And then we got the main bear market corrective pattern. We got a decent 1, 2, 3 wave move, and then we just corrected into the, once we got this main wave 3 is always the best move, always the biggest move. So that's a wave 3, that's a wave 3, and then you get corrective waves. So the point I'm trying to make is, if I'm wrong, if my timing is wrong, then I just get out and step aside on the short, for the shorts, and then just line the charts up and then see if that is going to play out at a different point or a different time. Now, so where are we now then? This is the FTSE where we are now. This is my chart's moved again. Hang on, this has a habit of moving. Right, so I got the fib ratios on the last big move of the FTSE, and I've got a high of 2018, and the low of 2020, the pandemic low and the pre-pandemic high. And so where we are now is last week I've started to short this last week. So we've had a lower close of the 2018 high. So on lower volume. So we've come up on lower, we've had a three-wave corrective wave. Doesn't matter if you don't understand the 8-wave, just bear with me. So last year we had a very weak January. We popped up into the end of the earnings season and then did a three-wave move into the autumn. And we've just completed a three-wave corrective wave into the 2018 highs. So if this is a corrective wave and this is all over and we stay, as long as we stay under 7,900, I'm going to stay short. If at any point we close above that, then I'll just close the trades and leave it and stalk the market further. All right, so I'm seeing this punch higher as a three-wave corrective wave after this distribution pattern. Does this all sound familiar from 07, 08? So there's the distribution pattern, the bear market last year, three-wave corrective wave. As long as we stay under 7,900, I'm going to stay short. So we've got a lower close. Let me just tidy this all up and enlarge it. So how many boxes does it tick? It ticks the weekly resistance, tick box number 1. Box number 2 is when we did come up, we came up on lower volume. If you look at the volume we had down here in March last year, it was double, just about double what we've had in the start of this year. Volume is the lifeblood of the market. So if you haven't got volume to sustain the market, then the chances of it staying up is drastically limited. All right, let's go down to, I'll apply this to other charts, other indices as well in a minute. Here's the daily chart. Now, this daily chart is looking at last year's range. So we had a high in February, just before the war broke out, 76.92. We had the low in 13th of October, and we've broken up. So here's the chart pattern. We could easily, within a chart pattern like this, go up to 79.60 plus if we start to break last week's highs. All right. I have started to short this last week. I've added on today's high. So we'll talk about the strategies of how you can handle this a little bit later on. So I need, this daily chart needs to come under 76.80. If all we do is come back and hold 76.80, then we could go back up to the high. All right. So this is my bear strategy. It's a very bearish market last year. So my bear strategy is the short rallies. Right, let's now look at the S&Ps. I'll tell you what, let's look at the DAX. Let's look at the German DAX. So the German DAX, based on last year's range, has hit the ambush zone here. The ambush zone is the upper fib ratio level. So the outer fib ratio level is 15,250. We were up there on the Tuesday, had 2 days of selling into this trendline support, and currently drifting between the trendline support and the ambush resistance. So as far as I'm concerned, we're in no man's land with the potential to carry through on this. If this is initial wave one of the ambush, then these highs are still shortable. We need to break 14,900 and come down as far as 14.5. If I'm wrong, if I'm too bearish, this will keep closing higher and come up above 15,250 and go back to potentially go back to 16,3 if I'm too bearish. But in the meantime, I am sticking to my guns and shorting these highs and seeing if this can work out. What could trigger this? What could trigger a further drop? Well, we've got US Federal Reserve meeting on the 1st of Feb with a potential another rate rise. And we've got the Bank of England meeting on the 2nd of February with another rate rise in the UK. The UK, the consensus for rate rises is a smaller rate rise in the US, another 50 basis points in the UK. So we are still in the grips of an interest rate cycle, an aggressive interest rate cycle. This is not to say this is a definite drop. I do not have a crystal ball. I do not know where the market's going to be tomorrow, let alone next week, let alone next month. This is just part of my December planning that is now written into my trade plan, and which will be my guiding light as the markets unfold into the coming weeks and the coming months. Any questions, drop them in the chat box. Otherwise, I'll continue. Anybody wants to ask a question, at the moment, your mics are all turned off. You don't have access to the mics, but I will turn them on if you want to have a chat and ask me something specific. Right, I've also shorted the oil today, and this is a day trade, not a swing trade. At the moment, the oil is looking like it's holding. I shorted it because it was at a trend line resistance and the volumes are very low. But if this pops up, my aim to sell the oil, because I think the oil is going to come down as well, my aim to sell the oil is 85. I'd like to see oil come up. We've got a potential head and shoulders. We've broken up through the neckline. This is the 2022 major trend line. So we started to distribute in June. We had a double top in October, November. That took us down to $70. And now we are potentially pushing up, holding 82.5 potentially, and then going to find 85. If we get up to 85 and sell, this is the 200-day average. So we were doing well all the time. All this period was obviously above the 200-day averages. These pullbacks were bought. Once we closed under the 200-day average, the highs sold. So we're under the 200-day average. So I tell you what, if we come and meet that 200-day average at 89.90, and oil loves round numbers, so that is a distinct possibility. If we do that, then that would even be an even better range to short. 92.50 was the major autumn resistance. So anyway, I'm just backing off oil. That's just for added information. I am short term. I'm day trading oil because I do like day trading oil. 10 cents per $10 per 1 cent move on the futures is good. Is great to have fun with and top up the account with. Right. Let's have a look. Switch to the S&Ps. So the S&Ps at the moment are punching higher. So the main resistance point for me is this 4,200, and we're currently just trying to hold the 4,000 mark. Similar pattern to oil. In fact, this is a cup and handle. Anybody likes chart patterns? There's the cup. We've come back to hold 38.80, and this is potentially the handle on the S&Ps, and all the time but this is the main structure. We had a structural breakdown here and here. First one was minor, the second one was decent. So if we climb back in this pattern and sit underneath this structure, either here or here, are areas that I would like to short in the S&Ps. If you look to the left of the chart, you can see May and August, we sold at 43.20 area at that time. So it would figure that we could punch through close to 4,400 or maybe 4,500, assuming we get up there, of course, assuming this holds. So I'm more bullish the US market than obviously I am on the UK. Right, so let's have a look at the market internals. Volatility index. Again, you don't need to know this. This is just something that I keep an eye on. This index is actually tradable for those of you, anybody who wants to trade it. Traders do actually buy and sell this volatility index. We had a spike higher into early Jan. We're pulling back. If this holds and we start to punch up in this volatility index, then that could drag this market down as well. All the time this index stays under 25, I would suggest the market can pick up. The dollar index, dollar is very subdued at the moment. Fed, it's a waiting game. What the market really wants to see is, certainly the US market, wants to see, NASDAQ. US market wants to see the rate cycle slowing down. Absolute minimum, it's got to slow down. It's very aggressive rate rises last year. If the rate rises slows down, then this market could wind up, not run up. I would suggest it would just wind up. Right, S&Ps, yeah, we're right on the 2022 resistance level. We're come in contact with the 200-day average today. So if we continue above here and close above 12,000, then I can see this potentially, if we get a run, could go and see 13.5 or plus. And so you can see, but obviously if we start closing under the 200-day average, we could roll over and come and see 10.5 and ultimately come and find these lower levels down here. I do think the US techs are oversold. I think we've got Microsoft results this week. Let's have a look at Microsoft. Let me go and find Microsoft. I'll punch it in. Hang on. Let's look at Facebook as well. Yeah, Facebook has been recovering after that very significant drop. Yes, that's potentially going to reconnect with a 200-day average up there. The volume is coming back in this. So we're coming up on volume. Microsoft. Don't want to spend too much time on this because I want to go through a few stocks with you. Yeah, so results are, I think it's after the close today, isn't it? I think, or one day this week. It's imminent anyway. a lot of volume on the Friday. Right, so that is those stocks. I want to go through a couple of updates on commodities. The wheat at the moment is back down into 22 lows. So I'm bullish the wheat. If we close under these 720, then I think we could potentially come down to 650, 670. So we have broken these recent lows. So that's not uncommon in commodities. Commodities like to break support. If we come back above 720 in the next couple of days, I think that's extremely bullish, and we might start this run into $8 plus. If we open and close underneath 720, then I think we're going to come and see, and particularly if we duck under $7, I think we're going to see 650. If that's the case, I am still going to be buying this. Obviously, my stop's underneath here. My stop's underneath $7. If I get stopped out, then I'm just going to walk away short term. But overall, I'm very bullish the wheat. Wheat is far lower than the corn. The corn and the beans. Now these all three, these normally stick together. They normally pretty much stick together. I've traded grains for many years now, quite a few years. So the corn is peeling back. So the structure price of the corn support is $645. If that gets under 645, then walk away. You can see we crashed into the 200-day average. And the beans are just pulling back to a sensible support level, having had a very decent run. Yeah, so the trend line support in the beans will be 1450. Let's go back to the wheat a second, because I think this wheat, ultimately, I'm looking for the wheat. I can see, if I'm right about the wheat, we'll see $15. If I'm right, I think we'll go back to 1340 and break up. Look at if you pinch back on that chart pattern, what we're experiencing now in the beans. The wheat. I think what's happening here could be a repeat of what's happened here. You can see the support underneath here at 650, and here's the $6. So yeah, we can't hold this, then we're coming back to 650. But whatever happens, I'm going to be bidding further on the wheat if we get the holding pattern and the increasing volume to match it. All right, gold. I suggested today that gold will come and find 1610. I was $1.50 out, which is annoying because it's done a decent run. It's done a $15, $16 run off the lows today. And I'm not in it because I was expecting 1910. That's the way it goes. That's the way it goes. Obviously, a very bullish chart. This dip into 1898 got bought. Last week we saw 1940. So the next stop is 1970. I'm still going to be patient. I'm not going to chase this market. I'm still looking for a dip at least into 1910. I do not chase markets. I let markets come to me. But I'm looking for 1967, 1970 plus, and ultimately going back into 22 highs. If gold runs, I'm looking for 2200 and possibly 2300 if it really goes bonkers. Silver. That's beans. Hang on, let me find the silver. Silver's pulling back nicely. It's a full-blown pullback would see us at 22.30. So the strength in the dollar in the run-up to the Fed on the 1st of Feb might do that for us. Expansive triangle. What's an expansive triangle? Expansive triangle is a bullish pattern where you can plot the major support levels. So if we come into the low of this expansive triangle down here at anything 22, possibly lower, and hold, then I would expect to go and find 25 plus. Long term, I still think we can see 32, 35 in the silver. Plenty of time. Don't dive in and buy these levels at the moment. Let's see if we can come down to these support levels. Right, let's look at a few stocks. Time is getting on. I'm still in Pan-African. I know you got out, Andy. You did get out at a decent resistance level, so well done. Volume is looking like it's coming back. You were saying there were charges on the dividends, weren't you? Is that right? Did I read that right? So we're sitting above this breakout pattern. We dipped in here last Thursday down there at 17.3. I'm still looking for this to get back. I still think there's a potential for 25 in this with AJ Bell, right? Okay. I think other brokers were charging 10%, I think, if I read that right. Yeah. So I think, anyway, I'm sitting in this. IQE took a really big drop. There's a trade update, and it took a really big drop. It nearly got to 61. I think this is buyable. It's a big drop. It is. I think these small UK techs are much higher risk. If you are looking for better risk potential, then stay away from these small techs. That goes for both sides of the Atlantic, not just UK. The other one to watch for is, the other one we talked about a lot is Seeing Machines. I'm going to talk to you about the Wealth Club in a minute. Yeah, Seeing Machines, very speculative. If you catch the decent lows on volume, you can get money out of this. But it is riskier. These small, well, any of these smaller stocks can have wild swings and you can get stuck in them. If the liquidity is too low, you can get stuck in them. Right, the stocks I like, I think Rolls is a good recovery stock. It's had a good push off of 65. Any pullbacks to the pound, we're 108 at the moment. Volumes are holding up. It may not drop to a pound. I think the Vodafone and the BT are good. They were heavily sold last year, but any drop into 88, I think is a potential to go back to about 110, maybe more. BT, I think I do like the pullbacks in BT. I regret not taking this. It's 130 here at the moment. The volumes are still not great, so I'm going to hold out for about 115 on this with a stop under 108. I want to see if I can get back to 150 plus on this one. I still think this is a takeover target. So that's why, but it served me well in recent times. I've been buying these dips down here at 95p. selling at 150 or £2. Buy, last we had a chance to buy 127 here in October 21, went to 190. I think I think this is it's a good value stock. It's not obviously not a growth stock. It's a bit of a slug. It's a good value stock, and I think Home Reach. I can get more data on the charts. Good question. Why am I using bar charts, not candlesticks? Because I can get more data on the charts. I'm looking at the bigger picture. I'm focusing on support resistance. So it just helps me to illustrate quickly some of the support and resistance levels. Thanks for that question. So I think these are good quality stocks. Barclays has had a good run. It's broken above this pink resistance level. So any drop into 150, 170 is still buyable on this. Let's QQ. I talked about QQ as a buy option. This is a good defensive stock. They're in cyber. I believe they're in cybersecurity and defense. So this 335 has got bought. The volume's picking up. I think QQ is buyable at 330, 340. The potential to go back above £4. And this one, not mentioned this for a long time. Chemring, another. Excuse me. I think their chief exec or CFO has just announced his retirement, so the stock's a bit beaten up at the moment. But if this one comes it's coming to support, well, it's closed underneath support. If we drop further back into this 240, 250 and the volume picks up, I'm buying Chemring. Because I think in the meantime, this is just pulling right back. I've had a look at the fundamentals and done a little bit of research on this today, and I think that this pullback is buyable. I'm not buying right now. There's no buy signal. I repeat, there is no buying signal in this one. I'm just stalking it. It's called Chemring, CHG. Ticker might be different on the other ones. Right. Couple of points on bear rating. Seems like, I've started this whole thing off on being very bearish. Let's just look at this one. I shorted this one in the past. This is Card Factory. Those of you who know me well will recall conversations I've had with you about Card Factory. That's shorting. You're looking at WPP, right? Okay. I've got another. If you're looking to short that sector, I've got a suggestion on that sector. Talk with you about that in a minute. So look at this, it's right up here and the volumes are really fallen off. So I'm going to get ready to short this one again. I'd love to see this get closer to a £1 mark. I'm going to be patient and offer out at 97 with a stop above at 105, because if I'm right, the volume has really tailed off. I don't know why this platform does that. We're very divergent on the MACD, lower histogram. I just think this is a very vulnerable stock. Gift cards, birthday cards in a high street business model, great place to short. DFS, that's already struggling. That looks to me as if that's a prime target now. Any pullback into 160 on DFS, I think, is shortable. It's breaking its structure here. It's broken its structure. If this works out, we could come and find a pound, maybe lower. If it really cracks, have a look. Bear with me a moment. If this really cracks, if it stays under 150, there is a distinct possibility we could come down to 50p on DFS. And right, I'm going to look at what's the other? My mind's gone blank. There's another, what's it called? The WPP competitor that I think is good. Again, this is a good, if you're bearish this market, this is a good, this sector tends to go into a dive, tends to go in recession first and comes out last. Yeah, so we've hit resistance at 944. Volumes are suggesting that this is not holding. If you're going to short it, I would try and short into these highs. It may do 950, but we've already rejected 945. If this is going to work out, this needs to, oops, this WPP needs to stay underneath there and start closing underneath that funnel pattern. What's the other one called? Let me check my list. Bear with me one moment. I'll have to put it in the room. I can't remember. I think it might be a WPP offshoot. I think it was some of the WPP directors went and set up a rival company. I've forgotten the name of it. Begins with F. Anyway, I think that's a great sell signal on the 17th. But so any pull back into that resistance, I think, is doable. Right. These evenings are going to be changing. I'm going to be running from now on. Thank you. That's driving me nuts. S4 Capital. Yeah, that's it. It's not F, it's S, isn't it? Yeah, look at this one. Gap down on July last year. You know what? I love these gap plays. Let's have a look at this in detail. It is possible that could go higher, but it is very weak and struggling. Why do I like gap plays? Because whenever you get a gap like this, you end up with a decent marker. If I isolate that area, right, so every time we come into this grey zone, there's a potential for it to fall out and drop back to that support down there at 110. So same with WPP. If anything, this is a potential better short than WPP. So we've crushed into trendline resistance. If we now close under 205, I can see that coming back to a pound. This is a very, very vulnerable sector. Like I said, this sector tends to go into a recession first and out last. I know that to my cost. I ran a financial comms company for quite a long time. Right. So those are good examples. Right. Quick look at what I'm going to be doing from now on is I'm going to be running a much wider service from now on. It's going to be based around, it's going to be aimed at day traders and swing traders. What I'm doing is I'm linking the two, because what I'm doing, as I am a day trader and an investor, what I'm doing is I'm using my time at the screen during the day to take call positions and add to them. So I'm not scalping as a day trader. For example, with the FTSE short I took last week, so I got short the FTSE last week. What I'm doing now is I'm adding to it on pullbacks. And then what I'll do on this, if this current short I'm taking works, I'll actually take it off on a next leg down, but I'm going to keep this core position. Anyway, so I'm doing swing trade positions as well in stocks. And so what I'm doing is I'm combining the two into this trading room service. And the trading room is going to be open. So these Mondays from now on will be scan and plan sessions. We'll do the usual free one at 6. Anybody who doesn't want to subscribe, that's fine. You can do the initial scan with us, and then we're going to kick off. Then the premium session will kick off at 6:15, 6:20, and then there'll be 20-minute sessions through the week before the US market opens. And we are going to be looking at all of these core markets. So all these markets we talked about, it's momentum markets being all the usual, the oil, the gold, the indices. So if you are long some stocks and you need to hedge, this is a good service for you. If you like day trading, this is a good service for you. Because I'll be talking about specific day trades. For example, I've been shorting oil today on a day trade. You can see, by shorting 82, we got as high as 82.70. So we are currently 60-70 pips off the highs. If you're a day trader, you don't have to have a big account. You could just spread bet that with £1 a point and bank. Normally on oil, you should be banking 100 to 200 pips a day on oil. Obviously, this is the start of the week, so it's slower. On the indices, obviously, I'm taking intra-week shorts and adding to my core position, trading around a core position. Called this short last week, and now topping up on any highs this week. And then, as with the suggestions on the bricks and mortar retailers, I'll be shorting. And then on the healthcare and techs, I'm bullish. I'm still going to be looking at US and some UK techs, and particularly healthcare stocks on the swing trading side. So these indices and the gold tend to be on the day, but these on the stock side, I'll be looking at UK and US techs and healthcare, and particularly, as well as financials. That will change once we come out of this recession, once the rate cycle has calmed down. So who's it relevant for? It's relevant for beginners, as long as you have a thorough understanding of SAR is support and resistance and risk management. If you are not confident on identifying support and resistance and using risk management skills, this is not for you. You need to fine-tune those skills and then come back to us once you have done that. For intermediate and advanced, particularly if you have a big account and you're a busy person, this is perfect. because then you can tune into the system we're using, and you don't need to spend much time at your screens. You can catch up on the updates and the suggested trades, and hopefully fill your boots. All right, so that's the way this is going to be run from this week onwards. I will elaborate on this as time goes on in the coming days. The cost is, if you're in the UK, it's £95 a month. If you're in the US, it's only $99 a month. Like I said, I'm very keen on US tech, biotech, and healthcare. I'm going to talk to you about a couple of other stocks in a minute before I go off. You can cancel at any time, and if you subscribe now and inside the next 14 days decide it's not for you, you get a full refund, no questions asked. You don't even have to give me a reason why you want to get out. So rather than give you a free trial, I want people to commit to this. But I'm very happy to refund it if you decide it's not for you in the first 14-day period. No quibble refunds. All right. Look out for information. I will be posting information on this. In fact, I'll be posting it tomorrow. Having identified all this with you, I will post this tomorrow on the website and send you links to that. I want to finish just by looking at this particular stock. It was represents, yeah, I think this Pfizer. What's the other one? Talked about Chemring. Right, no, this is. I think this Pfizer is a very, very interesting stock at this level. Again, this is one I've been in and out of quite a few times. Good question. Let me come back to you about that. Right, I think this Pfizer is. I'm going to be buying into this tomorrow, assuming the volume holds up. So I think this. We had a head and shoulders here on the Pfizer here in the autumn, shot its way up close around the $55 mark, and here we are at $45. If this closes well today above this trend line on volume, and we can ultimately get a crossover in the MACD and close above 46, I will hold this stock, and I think the target for this, and this is going to be crucial. This service is going to be very much about pinpointing targets and managing a trade, not just chucking ideas at you and entry points. I think this can go back to 58.60. That would put it at the 21 December highs. I think this can potentially go back to 21 December highs. It's a good sector to be in. It's quality stock with a good balance sheet. In an aging population, I love this sector. And this is the kind of stock that I will be talking to you about and following and updating you on. Okay, so I've done some. I will put the recording out. Anybody who's late, don't worry, I'll send you a recording. So I'm stalking Chemring in the UK. I am waiting for pullbacks in BT and Vodafone in the UK. And oh, I know that the other one I mentioned last week, and another favorite of mine I've been in and out of is Medtronic. This is already running. This is all, I say running. It's already picking up, but there's plenty of time. I very much like Medtronic. a good quality stock, good balance sheet again. Tidy chart, and the 2022 high, the 2022 low. Yeah, so I would, if you're not in this, I would look for the 80 mark and see if you can pick up 80 on this. But we've already come in since I posted it. It's up from about 75 to 83, but there's plenty of time. Don't chase. Wait for a pullback. So we've broken out of this little pattern here. I would wait for this to come back and retest this structure support down there around the 79.80 mark. All right, target on this one, I think we can go back to the 100 mark. And if it really catches a bid, we've got a gap up there. We've got a gap up there at 110. And the 22, yeah, I think we can go back to 22 highs if this works out. I need, obviously it's going to wiggle around on there. The short-term target, the swing target will be around about the 90 mark. If you were looking to just take a swing out of it, buy the pullback and see if that can swing, particularly if you're in options. We've got Cecil in the room. Yeah, Cecil, is this the kind of thing that you would take an option on? You could. Would you sell puts on this? Anyway, I think this can go to 90. Yeah, you'd sell puts. Yeah, I thought so. One of the most profitable ways of trading options, I think. Anyway, I think Medtronic is good. Medtronic, Pfizer, great stocks. I hope. Oh, you see, look at this big gap here. You know, huge gap up there at 101. That gap was formed from a drop in May last year. It's a good option. Just don't chase the markets. Right. Time's up. I'm off. I will punch it. I will let you have the recordings and the specifics to do with the trading room tomorrow. And have a good evening. Good question. Yeah. Any other questions? Let's have a look at the pound US. Patrick wants to look at the pound US. Good idea. I'll look at the euro as well. So we've just hit. So we come off the 200-day average in the early part of the year, or the first week, hit this major resistance on Bank of England on the 2nd. This is a good, yeah, this is a good wind up. This is a good anyway pattern actually. You're looking at shorts, right? Okay. Well, if you're looking at shorts, we've hit 124. This high is a potential short area. I would suggest this might do a full-blown move into 125 plus. If we start closing, we've knocked our heads against this resistance already. So it could be the shorts are getting position already. Any push into 125, if we get there, is still potentially shortable. You see, 126, we're up there at 126 last June. It's divergent. MACD is divergent here. The volume's already tailing off. We have a lower close already. So even selling into this 124.50 might be enough. Yeah, so we've had a decent drop from that resistance already from the December. So if this is a pullback and then we close underneath, we stay under 124, then yeah, I think we could start to wind down and potentially come all the way back down here. So it would figure, based on my scenario of a weak UK market, it would figure that could come off as well. And of course, it was incredibly bearish last year, wasn't it? So yeah, thanks for drawing my attention to that. Let's have a quick look at the euro before we go. I am finally going to go then. The ECB were talking this up today in the form of conversation about rate rises. So the euro short is up there at the 110 mark with my grey zone. However, if we get we are struggling here already. You can see how the markets are waiting on the Fed. So if we start closing underneath this 108, this could fall out the sky already. We do seem to be struggling up here. Spent most of the year, spent 3/4 of the year dropping last year. So we've retraced into a lot of our resistance. If it closes under 107, then this is potentially dust. This is toast. Tesla, okay. Blimey, this is keeping me at my screen. Let's go. Tesla. They have, since they dropped their price, which got a lot of people annoyed, they have seen quite a pickup in sales, I believe. So we've got all that resistance under there. That is a heck of a lot of volume. Right, let's look at where's the 22 high? There. Right, so last year's range was here. Whoops. It looks as if it can get to 170. Very, very significant volume. I would wait for a pullback to 129. It's tough. Once the run's underway, it's always that much tougher. Let me try and peel this apart. You bullish or bearish? Let me have a look at that one as well. God, yeah. You're bullish, right? I would wait for a bad hair day and see if that comes back to 127. There's a lot of volume on it. But the run is already in progress, so it's that much harder. In answer to your question, Andy, no, I didn't get into this. Had some concerns. Okay, this is a miner called TGA Thungela Resources. It is really shaping up, so I don't think that it's too late at all. I think any drop to 11.38 is buyable as long as you get a stop under these lows. Because if we come out, if we can close above the 200-day average anytime soon, I think this could pop back to 7. What's your target on this, Andy? If we hold above 12.75, 16. Right. Okay, well, that would make sense. Yeah, you're looking at a, a move into that resistance. 15.75. I would I would go 15.75 if I were you, rather than wait for 16. But hey, it could even go. It looks good. It's a holding pattern. Volumes have been improving. Gold looks good. So this is, yeah, thanks for sharing it with us, because that does look like a good stock. Brilliant. I'm gonna run. I'll answer that question that you posed direct to me tomorrow, Andy. In the meantime, I've definitely got to go now. So yeah, thanks for calling out. Thanks for getting me to look at the pound as well, because that looks interesting. Yeah, let's hope we don't tread too much water before these banks announce. But yeah, that's what I'm doing. That's what I'm looking at. See you again. Look out for the info. Cheers. Bye.